All attendees are in listen-only mode.
Good afternoon, everybody. Welcome to your live market update and charts of the day for today. Great to see you. Thank you for popping in. And whether you're watching this live or go to webinar or YouTube or watching it later in the replay, then you're very welcome here. Thanks for being here. And of course, as we start off, lots to talk about in markets today, actually. Very, very interesting times. But we need to give you this message that's always important. Just to remind you to do your own due diligence on anything you see here. Make sure you follow trading plans, and of course, make sure you manage risk on every trading action, entry and exit. And of course, make sure it's consistent with your personal trading objectives and financial situation. Thank you to those of you who already said hello. It's always very appreciated. G'day. It is a hot everywhere afternoon. It's actually quite cool here in Perth, considering what it's been like the last few days. So we're good on that. Thanks for the heads up on the AV. Good morning to you as well, Wayne. Hi to you. G'day, Rob. I hope you're good. I hope Thursday is treating you well so far. All right, let's get into it. As I said, lots going on in markets today. So we'll try and unpick it all. Obviously, overnight, we saw the US snap a 3-day winning streak. The Dow pulled back from record highs. Geopolitics continues to be in the headlines. Lots of sort of talk, not only about Venezuela per se, but more of market interest is the continuing narrative around other countries, notably Greenland, and some of the other Central American countries such as Colombia, etc. So we're going to keep an eye on that. A couple of other things going on. The Affordable Care Act, which is essentially subsidies are finished on that, and that's going to create a world of pain for many Americans in terms of being able to afford healthcare in 2026. There is a potential resurrection in the House. Certain Republicans have skipped the aisle, and there may be another bill coming across that might extend it. So wait and see with that one. Defense companies are also in Trump's crosshairs. As well, he's had a pop at them for some of their financing internally and stock buybacks, etc. Whether anything solid is going to come from that remains to be seen. But obviously, they've gained significantly from what's happened over the last few days. So volatility in that sector remains, and bear that in mind if you're thinking of defense stocks as a potential play. We've also got big data and earnings looming. We did have the ADP jobs report last night out of the US, which was softer than expected. Two other big jobs reports to come out over the next couple of days. We'll talk about those in a little while. US futures after last night's small pullback, it wasn't significant in the general scheme of things. So the futures are flat in early Asian trade. Asian markets are very mixed. The ASX is managing to hold on to gains of around about 0.25% when last looked about 20 minutes ago. We'll check out what they're doing right now in a moment. And European futures are indicating a cautious start to the day when this afternoon comes around. We did see some buying in the US dollar index, and that's just creeping up a little bit. And nearing highs not seen in a month. So we'll have a look at China in a moment. And much of what the prognosis is for the USD is in the balance based on some of the data that's going to come out over the next couple of days. You would suggest, because we saw that slight strength in USD and maybe Venezuela is less of an issue. Gold, which is rallied towards record highs, just pulled back a little bit. Copper also retraced from record highs after that strong move we've seen in the last few days. Oil, however, looks weak, and this is despite some EIA data that showed a slightly bigger drawdown than expected last night. But the 30 to 50 million barrels of oil that the US are going to gain from its Venezuela excursion isn't moving markets positively at all. And oil, as we'll see in a moment when we look at a chart, is looking as though it may test long-term support. We talked about this last night on it in a circle. Bitcoin's pulled back from a failed test of resistance, and today we've got US weekly jobs, Swissy CPI, if you're thinking of investing in the Swiss franc at all. Oh, I think, yeah. So that's going to be interesting. But tomorrow's the big day, and we've picked things off in the morning with Chinese CPI. And then we've got some big data coming out in the evening. We've got obviously non-farm payrolls, and then consumer sentiment coming out after market open. We did see a soft CPI, and I did suggest that I'm not sure it was sufficient to alter the expectations of a rate cut. And that, I think, if we just look at the RBA rate tracker, you can see there virtually nothing in terms of a change. So still very unlikely to pause. In fact, more likely to, very unlikely to drop, and in fact, more likely to raise rates. In fact, that chance went up. Back to that data, back to where it was pre the last week at the end of 2025. So back up to 36% that they may in fact raise rates. My feeling on that is that is more likely to be a later in the quarter move. But certainly, unlike the US, where the emphasis is down, the emphasis in Australia is potential move, which isn't good news for a lot of us, obviously. Right, let's check out just another couple of sites. Let's just have a look at the futures, and you can see they're pretty flat. They're actually slightly better than they were earlier, but not much. European futures flat after, of course, the US closed near its highs of the session. In fact, it hit intraday highs on the Dow. If we just look at that from last night, you can see there that the highs of the session on the Nasdaq were towards the midpoint of the session when European markets closed. All of the markets dropped off towards the back end of the day. Some buying into big tech, Microsoft and Nvidia noteworthy. Elsewhere in the futures, we're seeing some buying into oil today to hold it above support. Gold's pre-neutral, copper's looking positive again. After that pullback, the profit taken yesterday. Again, we'll look at a chart in a moment. Just looking at the data, you can see those US jobs report this evening is expecting a slight increase in unemployment claims, and the Swiss CPI is expected to pick up a little bit, but near neutral. Here's tomorrow's big day. So we've got CPI and PPI coming out of China. That's huge. Jobs that can kind of squash if you're investing in the Canadian dollar. And non-farm payrolls are massive, of course. But that isn't all. Just watch industrial production coming out of Germany. Any surprise in that may cause a flutter in the euro. So fairly big couple of days to end the week this week. And then, of course, next week we're into US earnings starting. We're into US CPI being released. So it's going to be an interesting 7 days, as you may have seen with some of the outlooks that have been published on the Go Market site. There is there could be some volatility around events in the coming days. Right. Okay. So let's check out some charts. I thought we'd actually start with Bitcoin here. You can see there, this was this test of resistance at 93,800, and let's call it 94, which mirrored what happened a month ago. There you see at the beginning of September and again at the end of November. So this, let's say 94,000 is becoming increasingly stubborn as a level to watch. So the pullback yesterday, some buying in today, trading around the 200 MA, we can see there. Bitcoin doesn't look as though the buyers are very keen at this stage. Oil was the other sort of big story, as I said, and you can see there we saw that drop off over the last couple of days. Just put this into context, put it in the weekly chart so you can see. So we are looking at a retest of this low that we tested in October and May, and each of that would represent lows seen since early 2021. So 4-year lows, 5-year lows nearly, at this stage in the crosshairs. Obviously, it's got to breach that to daily chart, but you can see the last couple of days, after a sort of flutter, really very tight range, we've just seen selling come in the last couple of sessions. So yeah, oil's of interest and will continue to be watched. Let's look at the US 500. You can see that pullback from that record high. Pretty neutral today. If we just look at an intraday chart, you can see on the hourly chart that intraday high that we saw, and then that pullback late in the session. And since then, we've sort of traded in a very tight range. So at this stage, it's like a market in waiting. We've got about 10 points up to retest this level here, which looks interesting now. And you would actually move this in light of previous price action. You'd probably move this line down to around about 69.17 as a level that we may see a bounce off, but at this stage, too early in the day to draw any technical conclusions from that. As I said, with the US dollar, we're seeing that continued move, which we've seen over the last couple of weeks, back towards testing this 98.50 resistance or potential resistance. See, there's a price action previously around this level. So we did poke our head over the turret in last night's trading, and a little bit of follow through today, but pretty well neutral. So again, probably too early in the day to make any or draw any conclusions about that. Here's gold. Did have a pullback yesterday after early in the day looking as though it was quite perky, but dropped off fairly quickly and then sort of found itself in a range between about 44.40 and 44.65 during the course or during the back end of the US session. There you can see that in. So a pause really in gold rather than any dramatic sell-off. So that's why it's a really typical example of why we call this resistance. We would need to see, for this to be a reversal pattern forming, to answer your question, we would need to see this start to drop beneath 44.40. I think that there may be at least a temporary reversal down towards this 4,400 level. Copper did likewise. We saw that pullback in copper again for the couple of days we've had, not surprising. We saw a bit of profit taking. And not surprising also, again, we referenced this on the session last night, that we could see a test or retest of the level that it's just breached. These are previous record highs here. We breached that for a couple of days of positive buying. Retest of that now, and you can see the buyers come back in. This is really interesting. It suggests perhaps there are quite a few people sitting, expecting this retracement. People now looking at this at 591, and technically we could see it move back up to retest this high. But at this stage, again, it's a case of seeing how the day pans out. But you can see that positive buying coming into coming into today's session after a sluggish start. That's over the last hour. Right. Okay. On to some FX pairs. Let's check out the US yen. You can see there we are heading back up to key level at 157. This is important. Last day of the year and the first trading day of this year. And we did actually play with a little while after a brief foray above on Monday, but you can see here that we are shifting back up to here. A breach of 157 could give a small increase, but again, I'm not sure. I think the jobs data that comes out tonight, if we get back into this range, will determine the direction next. So for right now, that's a wait and see. Let's put this on a bigger chart. You can see the weakness continuing in the euro on the back of that USD strength. So we've got this double top fully formed now. If you look at the hourly chart, you can see here we're testing an intraday low from yesterday. That's probably quite important. That's why we've paused at this point technically. And this also corresponds to price action back here on the 5th as well. So 116.70 looks like a really important level for the Euro USD. Worth keeping on your radar. Should we breach this? We're possibly looking around about a 20 pip move to retest this level here. At around about 116.55. So again, we're sort of, this consistent downwards trend channel is interesting on the 4-hourly chart. This is certainly a better bet than perhaps we're seeing in the US yen. If we look at the Aussie US, this is looking quite bullish again. You can see the breach of that pause level at around about 67, retest of it. You can see the bounce off it today. Probably capped in the short term until we get that data out tonight to around about, again, 23 pips up to there. We did an intraday for it, but you can see there that we just sort of dropped off throughout the course of the day from the start of the European session, really. A short-term double bottom, but this looks just very, very noisy in here. It's not filling you through a technical confidence. The Aussie yen looks interesting. If we look at the 30-minute chart, you can see there that established level at 105.70. 105.57. Possible move up again. We're talking 20 pips. Before we might hit a pause here. So really, really scraping to see anything that looks in any way, shape or form interesting. The Euro Yen, very similar picture, coming up to a key level, but the upside potential to that is questionable. Just seeing if there's anything else. What's the Kiwi doing today? Okay, my chart of the day. Could be no trade for the Asian session and see where we sit after that data this evening. I'm not liking FX, any of these FX charts that we're looking at right now. Let's just have a quick look at the Aussie Canadian dollar. No. The Aussie Swissy looks very, very samey. So really, we've got a flattish day on Forex, and sometimes it's best just putting it all aside and wait until the next session starts to see what happens. So unusual situation of not having a US chart, a FX chart of the day today. So let's Silver, yeah, we can have a look at silver. Silver futures. So much the same as gold futures, the pullback possibility of getting back into a range here if it reaches 78.81. But again, that's not filling full of confidence in terms of the potential upside in that. Let's move that up here a little bit. Right, okay, so let's see if we get any more joy on the ASX. We'll just use a scanner for ease of use. Right, okay, let's see what's looking. Is there anything that's looking right now? Obviously, lithium stocks, and we're doing really well. Let's check out PLS. Continue to look really strong. There's the level of interest. We talked about this again last night, around 488. This would, again, we've got, so that's about 7%, isn't it? That's right. About 8% to retest those highs if we breach that, but it could pause it within this space. But nevertheless, looking very interesting on PLS. LTR, another one that we're on our radar, as well as LYC. Let's have a look at LYC first, see if we're getting a bounce. We had that bounce yesterday, just a little shy today at this stage. We need to see a breach of 1630 to suggest we might be going higher from here. And we'll have a look at Liontown Resources as well. Very, very positive day for Liontown. Again, that just continues to look great. Now, there's an interesting technical aspect to this now. As we've breached this level that was in place after this gap on back in October 2023, there is a potential chance we close this gap that we saw here. So there's a number of reasons why Liontown are looking very interesting. We're obviously above all the key moving averages. We've moved above a psychological key level of $2 this week. And there is that potential move up to 255. With money still coming into lithium, it does look strong. Wouldn't be surprised to see a bit of a profit-taking pullback. Maybe towards the back end of the week. But at this stage, the buyers just keep on piling in. There's no overlap of candles there. It's just buy, buy, buy. You can see this on the hourly chart as well. It's just been a constant move to the upside. Very little retracements intraday. So it does suggest that the buying pressure is there. Maybe getting a bit of bandwagoning going on at this stage. So just be cautious with this. But at this stage, technically, it looks very strong. Is worthy of consideration for chart of the day, without a doubt. So yeah, just keep an eye on that as you go. Elsewhere, IGO again looking strong. Mineral Resources again looking strong. It's the same story. As for uranium stocks, which are also having a good week, let's have a quick look at Paladin. See, Paladin seems stuck around this level here at 1090. So you need to be patient with that. As for Deep Yellow, it does look as though it is up. This is the key level. If I put this on a line chart, it just makes it more. It just makes it more obvious where the key level is that it's been tested, which is at 208. We are at 210 at the moment, so we are tackling that. If you want to, an ATR is around about 8 cents, so 4 cents above that, if you like the idea of half an ATR space, would be around about 212. But the buyers are certainly, and I think this is one worth keeping on your radar potentially. And iron ore stocks have been very good. Qantas is doing very well today. Let's have a look at Qantas. So again, the scanner's popped up. Qantas looking interesting. And the only debate about Qantas is that there is quite a lot of noise in this space. There's temptation technically to suggest a move up to around about 1076 is on the cards. That's not filling the world full of happy joy feelings. So at best, you would suggest a move of 2.5 to 3% before we hit noise again. FMG looking positive. Again, we can sort of see here that we are retesting this level here at 23.23. Context is always important, of course, and you can see why this level is important. All this price action during 2023 around this level before finally we breached and moved up to 29. It looks a little bit like a coiled spring on the weekly chart. We had that retracement, which is not uncommon for FMG. You can see retracement. So have we got enough buying pressure to breach that 23.40 level? One again for your radar. I actually quite like that as a chart of the day. So I'm going to put FMG up as a chart to keep an eye on. Obviously, as always, it's called resistance for a reason. So even don't get itchy trigger fingers if you are thinking about this, if you are considering that it might fit your trading plan. Be aware that there's an equal risk of it breaching resistance and then dropping back, perhaps back down to around about 22. Technically, that could happen quite easily. I'd be interested just to put the probability indicator on this and see what that suggests. I'm guessing it may suggest a range bound. I don't want its latest version. 50% up, 40% down, so it's pretty balanced. It goes the next 3 bars, but obviously there's a slight uptick because we are nearing the top of the range. It's interesting. Anyway, let's just have a quick look at a couple of big tech stocks from the US, just to complete the session today. Let's just put some template on here. Let's organize it by this. Obviously, the US, with any US investment, you've got to bear in mind that earnings is imminent. Let's look at Google extending hours trading. Then the market cap on Google has now surpassed Apple. I think for the first time forever. You can see that move in Google in extended hours trading, very strong, back up to 322. That's a positive chart. Real pretty good actually as well. Just back to the ASX very temporarily. Let's just check out Nvidia. We're waiting to see if Nvidia can break out of this range it's found itself in. And you can see the upside. We've got essentially a 1, 2, 3, 4-week test, 5-week test, a 4-week test consecutively. So this 190 is beginning to look stubborn. Usually 5-week rejection is a pretty strong sign that the market's just not interested, but obviously to the downside as well. You've not got much space to this 185 level. Very, very tight range for Nvidia. So it's sort of very much in the balance, worthwhile keeping on your radar, but obviously at this stage Google looks technically far more interesting. Tesla have had that continued pullback from its test of 500 and now all the way down to 432. That's a 13% drop from its high. It's sort of interesting. Oh, Zip. I must have missed Zip. Late, coming up on the rails. Zipco, a very, very strong chart. Technical double bottom back to the ASX. I'm just seeing that. I'm just clicking on now. Back over its 200 MA, testing this level. 340, that's a bonus chart of the day for you. So Google in for your radar today to keep an eye to see what the next move might be. Google and in the US, Zipco and Liontown Resources on the ASX. And for FX, I would just sit on my hands and see what the action this afternoon brings. Anyway, I hope that's been interesting, useful. It's been great to have you along. Thank you very much for popping in. You guys take care of yourselves. We'll see some of you this evening on alternative one of the webinars, and I look forward to serving you then. So have a wonderful Thursday. See you back here on Monday if you're around and about. It'd be great to see if you can make it. And of course, if you are watching on YouTube, either now or later, if you wouldn't mind just clicking that little thumbs up button, but more importantly, subscribe so you get notified of any events coming up. Thank you very much. Cheers, Rob. Thanks, Wayne. You're very, very welcome. You guys take care of yourselves. Have a good day. Bye for now.